On today's Hashi, I'm discussing the Consumer Price Index report, CPI, for January, Jerome Powell's monetary policy report to the Senate, and mortgage application data for the last week. Today is Wednesday, February 12th, 2025. I'm Byron Lazine, and the hot sheet starts now. All right, big Jerome Powell day here on the hot sheet. Let me know in the live chat which market you are tuning in from, how you're feeling about the unfortunate news of the morning, which is ultimately that 10-year shooting up. Do not expect the long-term rates, the 30-year fixed, to be moving down today. We're going to get into it, what it all means. Most of it, I think, on the long-term rates is going to be correlated back to the testimony from Jerome Powell in front of the Senate yesterday. We'll get into that in just a bit. But first, as of 8:30 a.m. Eastern time this morning, we had another CPI report. It's reflective of why the 10-year has obviously shot up on this Wednesday morning. CPI for January just released here by the Bureau of Labor Statistics. CPI did increase 5.5% on a seasonally adjusted basis in January. Again, it rose 0.4% in December. And over the last 12 months, the all items increased 3% before a seasonal adjustment. Now, I tweeted this one out here. The index for shelter rose 0.4%. And that's the biggest driver on this CPI report, unfortunately, and it counts for nearly 30% of the all monthly items increase. And so shelter is still dragging down CPI. The big news here, the 0.5%, it's a miss. I mean, that's the headline that you're going to see out there today. It's higher than expected. Okay, so inflation is sticky. It's perking up more than anticipated. Jerome Powell, we're going to get to his comments and what he feels is happening here with inflation and how to kind of prepare for that moving forward. Okay, if we just take a look, obviously we've made some great progress, but if we take a look at the chart, which is evaporated from the story, I don't know where this chart has gone. Let's find it here. Here it is. Consumer Price Index. I should have just went into my charts over on BAMX, but here we go. 3.3% less food and energy for the CPI, all items at 3%. So while this is more than expected, we're just kind of flattening out here. You see all items does have an increase that looks more substantial on the chart, but just kind of bouncing around now, this 3.3%. We've heard the numbers twos in the past, but we're just not quite there right now. So Dow's down more than 400 points after this hotter than expected inflation report. The markets and the investors like to see things come in where they expected the numbers to come in. Okay. Let's just take a deeper look at shelter. I have a big issue, obviously, with how they're calculating this, particularly from the owner's equivalent rent metric. That number makes absolutely no sense, as we could all agree on that. And many obviously have pointed that out as an issue. Okay, so shelter making up 35.4% of the overall shelter here of CPI. Rent of primary residence went up 0.3. That's weighted at 7.4. Owner's equivalent rent of residences weighted over a quarter, 26.2. That went up 0.3 December 24 to January 2025. That's the big number here, is that 4.6 covering the unadjusted 12-month run, 4.6 on owner's equivalent rent of residences. We've got all the details inside of BAMX for you if you want to pick through this. There was a bunch of stuff that was down quite a bit. You know, if you get into apparel, down, some other items, linens down, appliances down. So, you know, furniture, some of these other items that support housing like appliances and all of that are down. You've got some groceries that were actually down. Some of the big movers going back here to the top of the report. This is a 37-page report, so really just pulling out the housing metrics for all of us. But if we go back to some of the increases, it was motor vehicle insurance, used cars and trucks, medical care, communication, airline fees, and that was, along with shelter, the biggest drivers on this inflation report. All right, inflation up, but we've got conversation, obviously, from Jerome Powell yesterday to get into as well. What we're looking for with Jerome Powell is any indication that inflation might be easing. He didn't give that indication. He said kind of the same things he's been saying here over the last couple of months, that they're concerned that we're not over it yet. We haven't exactly gotten to where they want to get to, which is 2%, and they're going to continue to be restrictive in their policy until we get there. Yet he did also mention that they're much less restrictive than they've been in the past. So let's go to some of these Jerome Powell comments. If we can go into, I'll read, Haley, the first clip, and we're going to go to Senator Cortez from Nevada after that. But just going into the hot sheet show notes, the Federal Reserve remains squarely focused on achieving our dual mandate of maximum employment, stable prices for benefit of American people. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. Guess that depends on who you ask. Now let's go to Senator Cortez. And we're just pulling all the data. We've pulled all the data for you, sifting through the BS for anything that relates to housing. And so let's go to Senator Catherine Cortez of Nevada, who did have a question related to housing, and hear Powell's response.
We talked about this over the phone, and I understand it may be difficult to answer this, but the Federal Reserve board members have been clear that future interest rate cuts are unlikely to happen despite the strong economy. But there are folks in my home that are in my state that are waiting to buy a home. And we know that's still an issue, the high prices right now for home affordability. You add the interest rates to it, it is a problem. So do you think it's most likely that interest rates will remain above 6% for this year, or can you even address that?
So overall, the economy is strong, growing 2.5% last year. The labor market is also very solid. Unemployment at 4%, quite a low level. Inflation last year was 2.6% for the year. So we're in a pretty good place with this economy. We want to make more progress on inflation, and we think our policy rate is in a good place, and we don't see any reason to be in a hurry to reduce it further. As it relates to housing, so it's true that mortgage rates have remained high, but that's not so directly related to the Fed's rate. It's really related more to long-term bond rates, particularly the Treasury, the 10-year Treasury, 30-year Treasury, for example. And those are high for reasons not particularly closely related to Fed policy. They may remain high. I think, once we lower rates and kind of rates return to a lower level, mortgage rates will come down. I don't know when that'll happen. And even when it does happen, we're still going to have a housing shortage in many places.
Thank you. Chairman Powell, thank you again for being here.
So if we go to, that last comment there, he's brought this up so many times. Even when that does happen, we're going to have a housing shortage in many places. Yeah. The thing is, we're going to have a housing shortage on affordable homes. I played a clip yesterday on yesterday's Real Word podcast from Ryan Serhant. I think it was on Fox Business or something. And, he said the crisis is affordability. That's the only crisis we're dealing with in housing. And I think we all agree with that. Like, that is the crisis. The crisis isn't actually the shortage. The crisis is the shortage of homes that are affordable. Okay. There's plenty of new construction options that are sitting on the market right now at 600, 700, 800,000, $1 million, $1.2 million. There's It's a buyer's market on new construction. We don't have a shortage of homes. We have a shortage of homes that people can afford. And that's the biggest issue. And so, Powell's going to go on to say here later on, I think we're going to get to this clip, that, the long-term rates are out of the Fed's control. There's very little that Jerome Powell can do to impact the long-term rate. And I have a clip from Elon Musk I think he was in the Oval Office yesterday, and he said something, whether you like Elon or not, that's not the point. He said something very interesting that has a bigger impact on the long-term rates. And Jerome Powell doubled down on that without, referencing Elon's clips, but they said the same exact thing that is controlling long-term rates, which is the 30-year fixed. It's why we saw back in, November and December, when the Fed lowered the short-term rates, and what happened to the 30-year fixed and the 10-year? They went up. Well, because people are less certain of the long-term security of those investments. People meaning investors. So when he said there, mortgage rates remain high, and that's not directly related to the Fed. It's related more to long-term bond rates. And he said they may remain high. And it looks like, certainly after today's news, that they are going to remain high. Let's go to Senator Kennedy, John Kennedy from Louisiana.
Yes. Through the Open Market Committee. You can't control long rates, though, can you?
No.
And here we're going to get to this. Here we go.
Why is that?
So a lot of things go into long rates, and one of them is the expected future short rate of Fed policy, but many, many other things go in. Expectations of inflation in the longer run, the sort of risks around the economy and around the budget deficit go into something called the term premium, which is the part we can't explain when we do these decompositions. And so, it's set by supply and demand in the bond market at the long end, and we're not particularly. We have some influence, but mostly not.
Many Americans are looking at short rates and looking at the Fed's behavior and how you reduce inflation, but they don't see the long rates going down, and obviously that affects mortgage rates. And I would encourage you and your colleagues to spend some time explaining to the American people why that is. Final question.
We'll cut there. I want to go to this Elon clip, Haley, if you have that from X. So Elon's going to explain. So Senator Kennedy's like, hey, I'd love for you, Powell, to explain why that is. Powell is saying, hey, we have some little bit of influence. Really, the influence that Powell has is how the markets react to what they're doing. That's really the influence. But actually, Elon in the Oval Office yesterday with his son explains it better than Senator Kennedy and Jerome Powell did on why these long-term rates are going to stay high. And that includes the 30-year fixed until this is changed.
It's just something we've got to fix. And then we've also got to address the deficit. So we've got a $2 trillion deficit. And if we don't do something about this deficit, the country's going bankrupt. It's really astounding that the interest payments alone on the national debt exceed the Defense Department budget, which is shocking because we spend a lot of money on defense, and if that just keeps going, we're essentially going to bankrupt the country. So what I really want to say is it's not optional for us to reduce the federal expenses. It's essential. It's essential for America to remain solvent as a country, and it's essential for America to have the resources necessary to provide things to its citizens and not simply be servicing vast amounts of debt.
Okay, so, and before this, Haley, and you don't have to go back to it, but earlier in that clip, he's going back and forth in the Oval Office with the media. And earlier in that clip, they're pressing him on the things that Doge is trying to cut and, working on making all of these cuts to make government more efficient and to reduce spending. Obviously, everyone knows the story. And whether you agree or not, the point that he made to the press there yesterday was we've got this $2 trillion deficit. It's unsustainable. I think anybody with, looking at this understands that. Investors certainly do. And that's why the long-term rate is not desirable, because investors don't believe long-term on this trajectory that America is on financially. And so he's saying we got a $2 trillion debt. And what he was saying to the press earlier was, if we can find $1 trillion, which he believes, and the administration apparently believes, that they can find $1 trillion to cut out of what they're spending. And if they can grow $1 trillion through deregulation and tapping in energy and all these other things. So $1 trillion of GDP growth for America and $1 trillion of cutting what would be considered non-essential or wasteful spending, however you want to look at that. What he said was, we have no inflation if you do that. If you actually bring the $2 trillion deficit down, you have no inflation. And what you also have in that scenario is lower long-term rates. If it'll become competitive to invest in the long term of America. Right now, it's just not competitive. There's not demand there. So there you go on that part of it, the long-term rates. What Powell is saying is the Fed can't control the long-term rates. He points towards the deficit in his comments. Powell does. He says, I go back to the quote he made to Senator Kennedy. In the longer run, the short risks around the economy and around the budget deficit go into something called the term premium. The budget deficit, it's not something that Jerome Powell controls. It's something that right now you're seeing, the Senate, Congress, you're seeing certain people in, elected politicians kick and scream about keeping a deficit high, which Jerome Powell doesn't control it. And he's saying, hey, reduce the budget. Elon and the administration are saying, reduce the budget to get inflation down. And so, they can keep going round and round on these questions with Powell, but until all the people asking the questions get serious, and that's both sides of the aisle, until both sides of the aisle actually get serious about reducing our expenses, those long-term rates are going to remain elevated. The 30-year fixed affordability issues are going to remain high. And that American dream, I talked about how Rocket.com did a great job articulating on that Super Bowl commercial, getting a sing-along. I talked about it on yesterday's Real Word podcast, getting a sing-along in the stadium and what their future ambitions are. They articulated the story well, but who's doing anything about it? Who's actually solving the problem on affordability? Let's go to Senator Jack Reed as we wrap up here some of the comments that Powell made in relation to housing.
As it was the case with synthetic derivatives. So thank you for your attention to that. We've talked about housing. It's absolutely critical everywhere across the country. We're in a housing shortage. Of course, while housing is difficult, two of the mainstays of our housing market are Fannie Mae and Freddie Mac, helping to support home ownership. Does the federal guarantee backing Fannie and Freddie help make mortgage rates more affordable and home ownership more accessible, Mr. Chairman?
I imagine it does hold down mortgage rates, the fact that they're the sovereign risk.
And how important is the 30-year mortgage to ensure that families can afford a home?
Ultra important.
The 30-year mortgage is very important.
Yeah. And I have heard some discussions about eliminating Fannie Mae and Freddie Mac, which would be detrimental, I presume, to the housing market.
That's really a question for you. You know, I mean, putting back in the private, putting housing finance back in the private sector has some appeal over the longer run, but I leave that with you.
Hold on there. I mean, that sums up Senator Jack Reed from Rhode Island there. I mean, that's exactly it. I mean, that's part of the dance here that both sides of the aisle in the Senate do, where they're asking questions that they have the keys to. Okay. And, you know, they just don't, both sides of the aisle of the elected officials historically don't make great decisions. And so what Powell's saying is, I can't control that. That's up to you guys. So why don't you, lock in here and make a decision on that. Let's go to actually Senator Jim Banks. The Tina Smith one from Minnesota was really long, probably, getting into the rising costs of insurance. There's a great conversation around insurance that I did with Lance Lambert from Resi Club over on Knowledge Brokers podcast a few weeks ago. That's a better discussion, I think, than what was had in the Senate yesterday. But let's go to Senator Banks' question here.
We certainly will. I imagine we already have, but I'd love to see it.
I appreciate that. Home ownership is an essential part of the American dream, but families are struggling to afford homes. In just 5 years, the price of a typical home in Indiana has gone up more than 60%. More than 3/4 of American families can't afford an average home in their neighborhood. How do the Fed decisions about monetary policy affect the ability of regular families to buy a home?
Most of what will have driven that increase will be about some of it's about local regulation, as you I'm sure know. It's also about just wages going up and costs of materials and things like that going up. And land costs and all that are going up a lot. The channel that through which we affect housing is, of course, interest rates. And right now, interest rates are still pretty high, but actually mortgage rates are really not set at the Fed. Those are really key off of longer run things. Nonetheless, we're clearly having an effect on that housing market, and that'll unwind as we normalize policy. But we're still going to be faced with high insurance costs and high material costs and labor shortages and all the things that keep driving housing prices up across the country.
Yeah,
my time has expired.
So reiterating the fact that, hey, the Fed, you're beating the Fed up. And, we hear a lot of questions here. We can go to, in a minute, we can go to Senator Rubin from Arizona. A lot of questions about housing because that's where, their constituents in their states are saying, I want to buy a home. I like that commercial on Super Bowl. Not the one that said homes.com is the best. I didn't understand that one, but the Rocket one that showed me like what home ownership means and what it would mean to me and my family. I like that idea. I like that dream. I want that dream for me and my family. And they're hearing that all the time. So they're asking the questions, and Powell is reiterating, I can't control this 30-year fixed rate. Okay. And so they all politicians do this. They talk out of both sides of their mouth. Okay. Like people should be able to achieve home ownership, and then they want to spend like crazy. So it doesn't add up. Now, what Powell's actually done, and I think most people who have been following, if we're following the hot sheet here, should be satisfied that, hey, like, Jerome Powell is still in place. They haven't moved to try to get rid of him. He said he wasn't going anywhere. He did a DiCaprio. So I'm not going anywhere. I'm filling out my term. But Powell's done a pretty good job on what he can control. Now, I think there's only two mistakes, and I've always brought these up. The first mistake Powell made, at the beginning of the last administration, was convincing these politicians on both sides of the aisle, they signed off on it, to spend another $2.3 trillion of money that was unnecessary. COVID was over. We didn't need to spend it. that is what caused a lot of inflation. That's what's caused a lot of these prices and everything, including housing, to go up. And the second issue I have is like what we looked at today with the CPI and how they calculate owner's equivalent rent. But, he's not going to be perfect. The 2.3 trillion was like, pick six in the Super Bowl type of mistake. Not a good thing to do, but getting this so-called soft landing in place. We're not in a recession. We haven't seen this huge labor break, and that's ultimately where they said to capture inflation, we have to have the labor break, which would drive down rates at the same time. We're very strong on jobs, and we're very strong on getting this soft landing in place, getting inflation down, and we're not in a recession. So, he's done a good job there. Has he been perfect? Absolutely not. But he's done a good job in all of those areas outside of, of what I just mentioned. Let's go to this. Let's do the last question that we have here. Senator Ruben Gallego from Arizona.
Mr. Powell, just kind of running along that vein of thought, the housing costs are one of the top concerns of my constituents in Arizona. From 2010 to 2022, rents in Arizona increased by 72%, and I wish wages were as increased to match, but they did not. And the average 30-year fixed mortgage rate has been above 6% for nearly 30 months. With very few rate cuts anticipated in the near future, potential cost increase from tariffs or imported construction materials, as well as the demand that we're going to see in terms of rebuilding from California and labor shortages. What do you think needs to happen to make housing more affordable in Arizona and the United States in general?
Before Powell
policy
continues there, hold on. So, guys, this is, if you drop the screen real quick, Haley, this is the show notes that we use. So, like, these are available inside of BAMX, obviously, so you can kind of go, so you don't have to watch this whole thing. We timestamp out from the beginning to the start every mention of housing, just kind of sifting through all the BS. So when we get to the senator from Arizona here, he's heard all the questions that we just went through. And yet he says, so his question was prepared by someone who, I don't know if it was him or somebody else that doesn't know what the hell they're doing or talking about. He has this prepared question that references the 30-year fixed rate being over 6% for 30 months. It's right here. We just listened to it. With very few rate cuts anticipated in the near future. Like, he just answered. What were you doing the last hour? We just broke it down, because this is an hour and 40 minutes into this testimony. We just broke down the highlights of housing. It only took us 20 minutes, but it was wrapped into the hour and 40 minutes. He's been sitting there in the room the whole time. And yet he asked the same question that's already been answered. Like, I don't control the 30-year fix. How many times? I mean, imagine if, what's the guy from Barstool? Dave Portnoy was the pizza review guy. What was Jerome Powell? Like, the minute he hears the question for like the fourth time, he'd go crazy on that person. Like, hey, clean that wax out of your ears. I just said it 4 times. I don't control the 30-year fix. Yet he asked the same question. I mean, what are these people doing? I mean, this is why we're in a $2 billion or $2 trillion deficit. There's just like so much incompetence. And I don't know the senator from Arizona if he's great at other things or not, but he's certainly not great at understanding what's going on with this economy. And he's the guy asking the questions to Powell. So let's go to Powell's answer here, and then we'll move into the mortgage applications.
And things to help housing supply are really in your wheelhouse, not ours. I do think, the housing markets around the country are still suffering from the after effects of the pandemic. Once that's all the way through and short-term rates are down to normal, whatever the new normal level is, I think housing costs are still going to be high. I think it's still going to be expensive to build housing in many parts of the country where
yes,
lots of
Fortunately.
the urban areas, the obvious places to build housing has happened. So I think it's a long term. There's a short term problem which will go away in coming years, but there's a longer term problem with housing availability, and that's going to be something that's not within our authorities or power to affect.
Okay,
You
so
know-
well, yeah, you can cut them off. They go back and forth a little bit, but there's not much there. I mean, Jerome Powell is right when it's like, hey, you want to impact. And I agree with Laura's comment here. I admire Powell's patience and his ability to stay focused. He has been very patient with really a lot of incompetence from both sides of the aisle. He keeps his composure very well. I made the example of Dave Portnoy because he wouldn't keep his composure. He'd go ballistic on these people because they don't make any sense. Now, I think Jerome Powell has also, since encouraging Congress to spend $2.3 trillion, he kind of like, what he said there was like having a 4-year-old, and it's like, I mean, this is the last lollipop we have, so like you don't have to have it, but if you want it, you're not going to have another lollipop until you turn 8. So you don't have to have it because it's bad for you, but I do have this lollipop. You're never going to see another lollipop until you're 8. That's what he said when they spent the $2.3 trillion. Go back and listen to it. He's like, this is going to be the last chance we ever get to print money for a long time because it's about to hit the fan. So you can't come back asking me for more money on the money printing machine. It's going to be closed down for a period of time. So that was the only time I thought he got into, but since that time, he's been very patient. He has not gotten political. He continues to kind of say, hey, Senator from Arizona, this is on you guys in terms of impacting supply. And he answers the same question over and over about them having not any control over the 30-year fix. All right. So listen, if you want to, we sift through all of this stuff for you guys so that you don't have to. We just drop it right into BAMX. So if you're a member of BAMX, you know where to find it. Go over to the classroom tab here, scroll down, hot sheet, daily market slides, and all of the slides that reflect today's conversation are in here, as well as those show notes with the timestamps is all in there as well. So all of the show notes with those timestamps that we just covered with Powell, it's all in there. Just go to school.com/BAMX to get access to all of the daily market data and slides and articles from the hot sheet, as well as all of our other courses and done for you content. We have over 30 plus courses loaded up in there. This membership is less than what people pay for one course, which is insane. People are getting ripped off out there. We've got 30 plus on-demand courses, weekly content drop, daily market data from the hot sheets. This is the best place to get a hold of me personally too. Just DM me right here through BAMX. I can't sift through all the spam on Facebook and Instagram, but if you want to DM me and get 100% response right here in BAMX, school.com/BAMX to get access to all of that. And you don't have to deal with Facebook spam, which is a huge plus. All right, mortgage applications. Mortgage applications for the past week. Here's some good news. Went up 2.3%. That's what we want to see. This is the survey ending February 7th. Purchase index, though, is the bad news. Okay, that decreased 2% from the week earlier. So that's the real news that we're looking for, is that purchase index. I think now we're going to be at a 2 weeks where it was up, 1 flat, 3 down now. So we're like going into this spring market pretty sluggishly from a demand on the mortgage side. Doesn't mean that there's not more cash buyers, coming in, but this is the reality of where we're at. This is the reality of rates being sticky, the long-term rates, and the 30-year fix looks like it'll probably go up today based on that CPI. The unadjusted purchase index, though, did increase 4% with the previous week and 2% higher than the same week 1 year ago. So that, I would say, is the biggest win here, that while it did go down from the week prior, it is 2% higher than the same week 1 year ago. And with the rates that did move slightly down, we saw 6.99 last week. We maybe would have hoped for more, as we're really starting to get into, we're not at the turn yet on this spring market, but we're a few holes in now, so we kind of have a feel for how this round is going. And we're starting to, hey, am I slicing the ball today? Am I drawing the ball? Do I have a little baby cut? What do I have here in the spring market? We're starting to get a feel. We were on the range. Now we're getting a feel for the actual game. It hasn't been decided yet. There's a lot of holes to play, but these are signs where you would have hoped to see more encouragement there from mortgage application. This number here is reflective of the CPI report today. You've got, again, stocks moving down, 10-year moving up. Yesterday, we saw the 30-year fix just kind of remain sideways there. Actually, let me update that. That's not updated. Essentially, it did remain sideways, a little tick up, 7.05. I expect that number to move up, unfortunately, again, after today's reports. All right, there's your hot sheet. Brought to you, of course, by BAM and our great friends over at Zoodealio, who provide every BAMX member a completely free platform to Zoodealio. You can generate 4 offers on every single listing. It's a tool to win more listings. Every BAMX member gets access to that, included in their BAMX membership. School.com/BAMX. Love to see you in the community. If you jump in today, send me a DM and let's chat. Love to hear from you. All right, there's your hot sheet. Make sure you're subscribed to the channel here on YouTube at Now BAM. If you're listening on Spotify or Apple, love for you to consider leaving a review over there. And we'll see you tomorrow live at 9:30 on the East, 6:30 on the West. You know the deal in between. Until then, toodaloo.